Hey, it's Nathan with optionsforall.com. In this video, we're going to discuss rolling multi-leg option strategies on Robinhood. So this is like credit spreads, iron condors, etc. Now this is like part 2 of another video I have where I teach you how to roll single leg option strategies. This one is multi-leg option strategies. But if you haven't watched the first video, please watch that one first because we talk about what rolling is in general. And you kind of need to know that before watching this video. So link in the description down below if you haven't watched like part 1, which is again rolling single leg option strategies. We're just going to hop straight into Robinhood and we'll walk through the process because I'm assuming you watched part 1. So let's go ahead and look at this particular put credit spread that I have on IBIT. So I'm going to open this one up real quick. And when I do that, Robinhood only gives me the option to basically close this particular trade. You don't see the option for rolling. Like if I come back here and I go to one of my single leg options, you can see that I have the option to roll this position. So Robinhood makes it really easy to roll single leg positions, but multi-leg positions, it's a little bit more complicated, but it's still definitely possible. But when you click in here, you see no option to roll, but you can still roll this position because all rolling is it's closing one position and opening another position, and typically you do it in the same order so it happens like simultaneously. And so that's all rolling really is. And to do it for a multi-leg strategy, we'll just go to view all options, and I want to make note of this particular expiration date, so it's December 5th. So view all options, and we'll look at December 5th right here. And I currently have that put credit spread set up. So we can see my short right here at 56.50 strike price. I have a short of 10. And then I have a long put option way down here. I have a very, very wide tail simply because if Bitcoin crashes to $0, I do want to capture some money and not lose everything that I own. And also doing it frees up a lot of collateral so that way I can place additional trades and things like that. That's why I have such a wide credit spread going on here. But let's say that I want to go ahead and roll this one. Maybe the price drops from $58.39 down to $55 and I need to roll down to maybe $54 and out, a few weeks or so in order to still earn a credit. So the first thing is we need to buy back our current position. So I need to go ahead and set it to buy and still on put because I have a put credit spread. So I need to buy the 56.50. We'll add that to my order. And I also want to sell my long put position, so way down here at the 30, and I want to sell in this particular case, and we'll add that to the order. So we can see that it'll cost me $1.78 or $1.79 to close out of that position. But let's go out a few more weeks. We probably got to go a little far out. We'll go out 50 to December 31st, so New Year's. And we said that we want to go ahead and sell the 54. I think that's what we were saying we wanted to do. So we want to be on sell and put because we want to short the 54. And you can see that we'll get a $2.15 credit right here, which is more than the $1.82 debit that we have to pay in order to close that trade. So it's looking like we're going to roll this position for a credit. So we'll go ahead and add that to our order. And then we need to go ahead and buy or long the further out of the money put option. And so I'm just going to go way down here to the 30 and it's 10 cents here. So we'll click and add that to our order. So we can see our total credit right there for 24 cents. So we're rolling this entire position out for a credit. We'll go ahead and click on continue. And then I can go ahead and do all 10 contracts right there. And so we can see my estimated credit for $268. And let's review order real quick. And we can see everything that's happening. So we're buying to close the 56.50 put with the December 5th expiration. We're selling to close the 30 put with the December 5th expiration. And then we're selling to open the $54 put with the New Year's Eve expiration. And we're buying to open the $30 put with the New Year's Eve expiration. So we're rolling our entire put credit spread out and down. And so that's how you would do it in like regular Robinhood. Now let's go over to Robinhood Legend real quick and I'll show you how to do it over here. All right, so we can see that I'm on the correct expiration date of December 5th. And we're looking at the put side because that's what we have is a put credit spread. We can see my short of 10 contracts at the 56.50 strike price. And in this case, I want to buy them back, right? So we're going to go to the ask side because we are buying those back. And then we need to come all the way down to the 30 strike. And we want to go ahead and sell those particular options as we're going to get rid of them as we roll to our new position. So we'll go ahead and sell those options. And then we'll go to our New Year's Eve date out here. and we wanted to roll down to the 54. So I need to set up a short right here. So I'm going to be selling the 54 strike. So we'll go ahead and sell by clicking the bid. So that's selling. And then I want to scroll down and open up my long. And we have it right here. We have the 30, and we can buy it for that 10 cents that we saw on the other page. But it's just another way to view and exercise these particular trades. Personally, I like using the Robinhood Legends. It's all, it's all kind of in one spot. You got the calls and the puts, and you can see it a lot more clearly, in my opinion. But we can see the same exact trade going on. So we're buying to close the December 5th at the 56.50 put. And we are also selling to close the $30 put with the December 5th date. And then New Year's Eve, we are selling to open the $54 put, and we're buying to open the $30 put for New Year's Eve. And you can see the quantity we have available. So I can do 1, or I can do all 10, or you can do 5. So that we can change the quantity to what you need. Or maybe you want to roll, half of them to one put credit spread and another half to another put credit spread. Or you can, get kind of fancy with it. We can go ahead and set our limit price and our time in force, and we can see our estimated credit of $298.29 to do this particular trade. And I want to do one more example. Let me come back to regular Robinhood real quick. And I want to hone in on this iron condor right here. So I have an iron condor open, which is already 4 legs, right? We have a put credit spread, and then we have a call credit spread above where the current price is, hopefully, unless the price went up or the price went down. And maybe we want to move one of the sides up or down, or adjust our entire iron condor. And I have another video on iron condors in general, so if you're not sure what an iron condor is, I'd watch that video. But since an iron condor is already 4 trades in one, Robinhood doesn't let you set up like an 8-leg trade, so you can't close out the entire iron condor and open up a brand new iron condor. You have to do one side of the iron condor at a time, which is basically like we just did. So that's moving a put credit spread or a call credit spread. And so I'm going to go through it real quick because we just did it. So let me go to view all options, and I want to go to my expiration date, which was December 19th. And so in this case, we're going to go ahead and pretend to roll the call credit spread. So here's my short side of my call credit spread, and there's my long on the call credit spread. So I would want to, so in this case, maybe I want to roll it down because maybe SPY has come down some. And so I want to move my credit spread a little lower and capture a little bit more premium. So I could go ahead and buy back my short position. So I need to go ahead and set it for buy, and we're on call already. So I'm going to buy this position back, and I'm going to go ahead and sell my long position. So let's switch it to sell, and we'll add that to the order. And then I'm not going to roll out, so I'm not going to change my expiration date. I'm just going to roll down and collect some credit. So let me switch it back to sell. So let's find a good place to roll it to, and let's look at our delta. So I have a delta of 20 right here at the 710 strike price. So I'm going to roll to this delta. We'll add that to our order, and then we need to go ahead and buy the other leg, and I have a $5 spread on my put side, so I'm going to keep a $5 spread on my call side. So we'll add that to the order, and you can see that we're rolling for a credit of 17. I'm going to go ahead and click continue real quick, and we could go ahead and select the number of contracts that we are rolling. So we got 3, and you can see that I basically get an estimated credit of $62.49 in the process of closing out my one position and opening the other position because I'm rolling down. So I'm taking on a little bit more risk, but the price also dropped, and I'm basically just keeping in line with the price by moving my trades, and I'm realigning them with the particular deltas that I'm used to and comfortable trading with. And so that's how you would roll your position for an iron condor. Again, you would just roll it one side at a time and realign it where you need it to go. And of course, you could do the same thing over on Robinhood Legend, but I'm not going to get into that right now because we just kind of did that example with the put credit spread, and it's the same concept with the call credit spread. And so that's it for this video. Hopefully you found it helpful. If you did, I appreciate your likes, comments, subscribes, anything like that. And I hope you have a great rest of the day.